So good afternoon, everyone. When I was asked to moderate this fireside chat, I looked at the topic. Vision for net zero transition isn't exactly the relaxing and informal fireside chat I had expected it to be. But I think to just follow the cue from Eddie, I will try and see if I can extract as much information, insight, and views from our two esteemed gentlemen so that it will be informative and it will be open and constructive. In particular, I'd like to see whether they can tell us not just the vision, but also the how, and also the what they have been doing. And if possible, I'd also like them to share with us what they would like from the corporates, from the banks, from the intermediaries, because transitioning to net zero is not the job of any one person alone. In fact, it's a collective exercise of communities, countries, and everyone in the world. Now, Eddie needs no introduction to all of us, so I would just say Chief Executive of our HKMA. Ian Johnston is a friend of Hong Kong, and in fact, he had been a special advisor to the SFC a long time ago. But I should mention that he has had a distinguished career, not only in global financial regulation, but also held senior executive positions in the financial sector, which gives him a different perspective. Currently, the Chief Executive of the DFSA, and also an IOSCO board member, the world's biggest securities standard setter, and also vice chair of its Africa and Middle East Regional Committee. So let me do some scene setting. I just want to remind us all that the scientists have been telling us for years that global warming is real. And freak weather will become more intense and happen more frequently. Now, last week, Hong Kong escaped lightly Typhoon Yagi. Our Typhoon 8 lasted only, those who were counting, like me, 18 hours and 20 minutes. Many parts of Asia, especially Vietnam, Thailand, were not so lucky. And even closer to home, nearly 1 million people had to be evacuated in Hainan and the Guangdong area. Now, this morning's paper is full of flooding from Storm Boris. I don't want to go there as to why it was Boris, and that was in Eastern Europe. It's not just rain, but extreme heat in places you wouldn't expect to find extreme temperature, including in Dubai. And we can also feel it in Hong Kong. In fact, when a group of IFRS trustees, including myself, spoke to Mary Shapiro, and many of you will remember her as the first former chair of the US SEC. And we sought input from experts who's been looking in climate change, for years before IFRS Foundation started the journey 3 years ago. I remember to this day, she bellowed down the Zoom call and said, "Our planet is on fire." So this topic is serious because transition to net zero is what our world needs to do to keep global warming to no more than 1.5 degrees centigrade, as called for in the Paris Agreement. And the whole financial ecosystem needs to engage because we read in the press that globally we need not a couple of dollars, but something to the tune of $9 trillion every year to help to transition to net zero by 2030. These are humongous numbers, and Asia is hugely relevant because Asia is still producing 85% of our energy from fossil fuels. And Asia accounts for more than half of the world's carbon emission. So there are plenty of opportunities for new businesses, new innovation, and new deals. So today we're talking about Hong Kong and the Middle East. The first question I want to ask our guests are, how regulators in Hong Kong and Dubai support the region's pathway to net zero? How policymakers create and foster policies to channel finance to sustainable development? Now I'm going to start with Eddie. So tell us what Hong Kong has been doing to develop itself into a sustainable financial hub in Asia, and share with us the coordinated efforts across the many regulators in Hong Kong to make sustainable finance, including transition finance, more accessible.
Right. Thank you, Teresa. We actually started our journey some 6-7 years ago by getting the government to start a government bond program to kickstart the creation of the ecosystem in Hong Kong. Now that government green bond program is already one of the largest in the world, with aggregate issuance of about $25 billion US, and that draws in a whole bunch of green reviewers, people, or DCM, the debt market divisions of investment banks who know how to put together green bonds, green investors, etc. And then now, after 6-7 years, Hong Kong is already one of the largest financial hubs in Asia with lots of green and sustainable activities. For example, we account for about 1/3 of all the international green bonds issued in Asia, already the largest in Asia. In our stock market, we've got about 220 ESG funds already. And in the last few years, in particular, we saw very rapid increase in our green and sustainable debt area, including both bonds and loans. In just 3 years, that the total bond and debt issuance increased from just 11 billion to 50 billion. So it's a 4 times increase in just 3 years. And that trend continues. And how we do it locally in Hong Kong, of course, there's a lot that we need to do together with the international community. But locally in Hong Kong, I thought 2 aspects are important. One is, as I mentioned, is a joint effort. Collaboration is extremely important. So collaboration and coordination is what we put a lot of focus on, especially in terms of the stakeholders within the government area. We put together 4 years ago a cross-agency steering group initiated by us and the Securities and Futures Commission, and comprising not only the financial regulators in Hong Kong, but also the government's Environment Bureau, to make sure that our financing policies align with the government environmental policy. We talk about us being financial regulators, not ESG policymakers. So we need to bring them in. And we also, at times, invite accounting profession, the banks, to come together to talk about how best to create the ecosystem here. And this makes sure that the various standards, taxonomy, disclosure requirements, or even supervisory approach that we use in Hong Kong for different financial sectors are all aligned and consistent. So we won't do our own things in separate silos. And I thought that also gives a credible name to the Hong Kong status as a green center when all the stakeholders group together on one course. So that's one thing, coordination and collaboration. The other thing that we put quite a lot of emphasis on is the need to be inclusive. Because one is all new, and second, it could be quite burdensome on corporates or even financial institutions that are not as large. For the global banks, for the large corporates, they will have the sufficient manpower resources to learn about all the disclosure requirements, learn about how to issue green bonds. But for the smaller institutions, we want to make sure that they won't be left behind, as I said. So what we did were several things. One is that collectively, through the cross-agency group, we want to provide tools for both the smaller banks and smaller SMEs in order that they can do, for example, the reporting. A few examples. One is a questionnaire that we did together with CDP, and it's basically a standard questionnaire given to the SMEs to answer 1 or 2 pages of questions And that questionnaire can be shared with all the banks. So they don't have to fill in 10 different questionnaires from 10 different banks in order that they can fulfill the requirements. It is a standard template that's easy to fill in. And we did that together with CDP, widely distributed and used by all banks. And secondly, we and the SFC also joined hands with the University of Science and Technology to develop a GHG emissions calculator based on that questionnaire. Basically, if you plug in the information in the standard questionnaire that I talk about into this calculator, it will give you a rough estimate of the GHG emissions without the need for the small corporates to really understand and calculate. It's that much easier for them to get into the green reporting regime without having to learn and understand the order or with a reduction of the burden on their part in reporting. So that's one example. The other is to help the smaller corporates to get into the green bond market because it involves additional costs, it involves knowledge, it involves the commissioning of the green reviewers. We got the government to introduce a grant schemes that subsidize new issuers or new borrowers who take out green loans. And in just 2-3 years, we already approved 450 different applications involving quite a lot of money on the government side, 180 million Hong Kong dollars. But that also stimulates billions of borrowing, which is green, using the global standard. And the third area that I want to talk about is the need to not just look at green, but the topic of today's discussion, which is transition finance. In most of Asia, we're really talking about how best to help the corporates to transition from brown to green. You can't just cut off the financing to brown. Otherwise, you will seriously affect electricity generation, affect the economies of individual emerging markets. We're really talking about how best to help these corporates to transition. That's actually a hard part. We need to work together. But on the grant schemes, we have just extended that to cover transition loans and bonds. So we hope that with this little nudge, there will be more focus from the banks, from the capital markets, to help with the transition activities. Okay, well, Eddie, thank you so very much. I mean, there was quite a lot in there. And I will want to come back to you on a couple of things that you mentioned, like the questionnaire, is it on the HKMA website, and then that calculating mechanism. And the other thing, what I want to come back to you in a minute is, are you happy with the progress, and what more you want to see the market come to you and help with this collaboration and development. But I want to turn to Ian. So the DFSA has been around for quite a bit of time.
20 years.
It was actually founded, according to my research, 2004.
Yes.
And your current chief executive role is a second stint, because you were the chief executive from 2012 to 2018.
Yes.
And for 6 years. Now, the first question I want to ask you, it's nothing to do with innovation or transition finance, is can you share with us, what significant changes you have seen? I think it's really fascinating to have been back to the organization, and the world has changed so much. Can you share with us?
Yes, happy to do so. And you're right, the world has changed so much. I had 4 years away back in Australia, and then was asked to come back again into Dubai and head up the DFSA again. Can I say how delighted I am to be back in Hong Kong? I love Hong Kong, love coming to Hong Kong. I'm very happy to participate in this Fireside chat. I must say I was happy to see that the Fireside chat wasn't actually taking place around a fire. Having come from the heat of Dubai and into the humidity of Hong Kong, a fire here would not have been a good idea. And we would have had to offset the emissions somehow had that been there. But the world has changed. So in the 4 years, if I go back to when I left DFSA the first time, 2018, we weren't talking about ESG issues to the same extent that we are now. Nothing like it, in fact. It was definitely on the agenda, but the sort of bodies that we're now members of, the sort of standards that have emerged and that we're signing up to, many of those didn't exist in 2018. So it's changed in that respect. The world of digital has come along. We didn't talk nearly as much about digital when I was there in 2018. So when I returned a couple of years ago, I did treat it as a new job, because it was coming into the same job but in a brand new environment. So And Dubai and the DIFC in particular had really kicked on in those 4 years. I was somewhat disappointed to see that they'd continue to progress without me being there, but it was good to see that had happened. So the place had grown, the financial center had grown, and we're dealing much more with a couple of pointy issues, and this being the biggest of them, that we weren't talking about quite as much in those days.
Right, okay, so Ian, to follow on with the sort of focus on transition finance, and climate and other ESG goals. So what measures has the DFSA introduced to incentivize people to kind of do better and to also take advantage of the facilities of the capital market there?
So I should maybe explain a little bit about the DIFC and the DFSA for those who might not be as familiar, but I'll do that very quickly. So the DIFC is a physical jurisdiction and a legal jurisdiction within Dubai and the UAE. It was set up, as you said, 20 years ago. A very clever model in that the UAE wanted to develop and Dubai wanted to develop an international financial center, thought that it would be difficult to do that organically, and so carved out 110 acres of land and imposed not just a physical jurisdiction, but a legal jurisdiction. So we're a common law jurisdiction. The laws of Dubai and the laws of the UAE do not apply inside the DIFC. We wrote the laws for the place, common law jurisdiction. We have our own courts, our own body of law. And when we run out of the laws that we've written for the place, then it's the law of England and Wales that applies in the financial centre. And what that allowed was for the world's large financial institutions and small institutions, for that matter now, to come in, feel comfortable with a body of law and a legal system they were comfortable and familiar with, and a body of regulation, dare I say, that they were familiar with. So we regulate only the DIFC. It now has more than 800 financial services businesses in there. Of the 29, I think it is, globally systemically important banks at the moment, we have 27 of them, most of the big fund managers, all of the big reinsurers, etc. So, but on this topic, so I think of it in three ways. The first is that I think our job as a regulator is to follow and implement government policy and the government agenda. As Eddie said before, and we've discussed this, we are a financial services regulator. We're not an ESG regulator, and we're not the policy maker, but we will do what we can to implement the national agenda, and the national agenda on this topic is very strong. The second thing that I think we have a responsibility to do is to enable and challenge market participants in coming to market to aid the transition. You talked about the sort of figures that are being bandied around before. If there's going to be a transition, it needs to be funded. It's going to be funded, it needs to be financed. One way of financing that is through capital markets. And so we, as a banking, insurance, and capital markets regulator, because we're an integrated regulator, we're doing what we can in capital markets to facilitate that. And then the third part is to learn from, the third way I think about it is to learn from and work with others. Because we are a financial services regulator. If this is not joined up, it's not going to work. If governments are not aggressive in setting the policy, we don't really have much of a guiding star to follow. So we do what we can to identify the policy, work with government, do what we can to implement the agenda, do what we can in cooperation and working with our market participants, industry bodies, standard setting bodies, and giving effect to what we can do together. And then, as I say, challenge our market participants. And I'll come to that in a moment as to how we do that. So the UAE has a net zero goal by 2050 and an aggressive agenda on how to get there. And it's our job to turn that into some sort of reality by creating the opportunity for things to come to market. We're part of the UAE's Sustainable Finance Working Group, which was founded a few years ago, and we're a founding member of that. So that takes all the regulators from within the UAE, plus the relevant government ministries, and working on an agenda for how we would advance things. Three main pieces of work that have come out of that. One is a set of principles for the effective management of climate-related risks. Those principles are being put into a regulatory framework, and they will apply to financial institutions. So making sure that banks, insurers, etc., properly identify, properly manage, and deal with the risks that climate change pose to them and to their book, basically. That's what that's about. And across the UAE, the other regulators are also looking at how they implement those principles and put them into the body of regulation. The second piece of work was working on principles for sustainability-related disclosures. Really important that things are true to label. Really important that investors are able to make an informed decision, knowing the benefits, knowing the risks. Really important that proper disclosures are made as to progress. So our sustainability-related disclosures pick up on the work of the ISSB. We were very pleased that IOSCO endorsed the ISSB principles, and we've picked up on that. The way that we've tried to approach all of our work in this area is to think globally but act locally. We don't want to be reinventing the wheel. We're very happy to say we benchmark Hong Kong. We also benchmark Singapore, London, what other people are doing, and work closely with the standard-setting bodies such as IOSCO. As I say, I'm privileged to sit on the board of IOSCO, so that's quite easy for us. But the work that the Basel Committee is doing, the work that IOSCO has done and that others are doing, and make sure that we're aligned with them. We can't afford to go and try and do this on our own. Now, the other bit about enabling the market, in the DIFC we have an equities exchange and debt exchange, which is NASDAQ Dubai. NASDAQ Dubai has succeeded in becoming the largest listing venue globally for Sukuk, Islamic bonds, and in particular ESG Sukuk. So about 60% of global ESG Sukuk by US dollars are listed on NASDAQ Dubai, and about half of all currency-denominated ESG Sukuk are listed on NASDAQ Dubai. So we've obviously played a role in bringing those to market. We issued guidance quite early on what we thought green bonds should look like. And there again, we didn't want to reinvent the wheel. We picked up on the work that ICMA had done, the International Capital Markets Association, so we picked up on their principles for that. We issued guidance early in respect of greenwashing and how we would identify it, what we would consider greenwashing to be, and importantly, how we would deal with it. And the way you deal with it is by enforcement, especially in capital markets. So that was about not just enabling, but challenging the capital markets, saying, look, we want you to bring these things to market. We will have an open door, and we do. We discuss, one-on-one with issuers what their issues should look like. We give standardized documentation, so again, picking up on the ICMA work, to try to make it as easy as possible to come to market. We've even waived our regulatory fees for green issues on NASDAQ Dubai, but challenge them to say, but when you bring it to market, it's got to be real. It's got to be true to label. Your disclosures have got to be right. We can't have investors being misled in this space. Now, I'll say something that I mentioned at a climate conference that some people thought was objectionable. I don't think it is. But I was reminding them that we are a financial markets regulator, a financial services regulator. We're not an ESG regulator. So if you think about what greenwashing is, it's the market being misled. It's market misconduct. So if I, as a capital markets regulator, see an example of the market being misled over here, and it's a greenwashing incident, and I see another example of the market being misled over here, if I don't have quite enough resources, I'll prioritize the one that's doing the greatest harm rather than automatically go to the greenwashing case. So because that's our job, we need to protect markets and protect investors. So we would go to where the greatest harm is. So we would always want to take action against greenwashing cases, but we have to remember our mandate is to protect markets generally. Then the final point on working together and learning from others, we benchmark, we participate in the standard-setting bodies. We really do want to sign up to the sensible standards that have emerged. And we can't do this alone, so we speak directly to our markets in depth and frequently.
Thank you. In fact, a piece of local benchmarking you can consider is, today is a happy day in Hong Kong because Hong Kong ICPA, which is Hong Kong's sustainability standard setter, has just published its exposure draft, full convergence with IFRS S1 and S2. So consultation open for a few weeks, so we will have to see what feedback we get from the market. But that is actually another example of us thinking globally, but also trying to act locally. But on coming back to you on the greenwashing, now I understand you have to tackle the greatest harm. So has your authority ever acted on greenwashing, which has been described by OSCO, for a few years as serious and rampant. And I have always said that Asia will not be immune from activists waging on corporates, who are maybe not as careful with their claims of either transition or whatever green-related activities that they talk about.
So you should think of greenwashing as a spectrum, not as a binary thing, because there might be examples of something at this end of the spectrum where something might not be deliberate and might be relatively minor. Down the other end of the spectrum is where there's just blatant greenwashing, where people are doing the wrong thing, trying to have something that's not true to label, but take the credit for it. We haven't had to take an enforcement action yet down at this end of the spectrum. We've had occasion at the easier end of the spectrum whereby we've had to intervene and speak to people and ask them to look at what they're doing, but we haven't yet, but we wouldn't hesitate to do so, take an enforcement action down at the harder end. But the tools that we as regulators have available to us have been around for a long time, because as I said, it's market misconduct.
Yes.
It's a market integrity issue.
Yeah.
So the tools that we've had to deal with other examples of market being misleading and deceptive conduct and market misconduct. We use bannings, we use delistings, we use fines, and we would use exactly those same tools. It's not a difficult issue. A bit of mystique has grown up around greenwashing, I think.
Yeah.
But I don't think it's that difficult an issue, because regulators have long had the tools to deal with other forms of market misconduct, and we would use the same tools.
Yeah. Well, it's good for you to remind people that potentially it is market misconduct, because people tend to think greenwashing is a bit of greenwashing,
No, it's serious.
As serious as serious fraudulent kind of misrepresentation, but at its core, that is potentially what it could be. Coming back to Eddie, so two things I asked you to think about. Can we get that questionnaire on the HKMA so that others benefit on it? And this calculator sounds amazing.
Right.
And the other thing is, what more do you want actually market participants to do in order to help with the building of this sustainable finance hub in Hong Kong?
Right.
And then I'm going to ask you one more. I'm so greedy, which is about taxonomies. I was quite depressed when I discovered that there are so many taxonomies on the debt side, right? On the listed company side, okay, we are trying to converge towards, one global disclosure standard, ISSB, but obviously every local jurisdictions will have to work out what they want to do. But on the debt side, there are so many, and our efforts being made to help convergence so that at least, I think the greenwashing situation can be improved as well.
Well, first, the questionnaire and also the calculator is on the cross-agency steering group website. So you can easily get on the CASG website and you can find them. And we are actually trying to make the questionnaire even more digitalized so that it's even more easy for the SMEs to use. And on taxonomy, I totally agree. We need some form of global standard, or at least global compatibility or interoperability. Disclosure is easier because ISSB has come up with a standard, as you said. The ICPA here has been coming out with a consultation document. And Hong Kong is really quite ambitious, trying to be the first jurisdiction to be an early adopter. So we're actually basically getting all the listed companies and more important non-listed companies to get on the disclosure standard. There will be a credible roadmap that will roll out by the CASG later. On taxonomy, there's no such global standard. So there's been a lot around. What Hong Kong does, we just put out our Hong Kong taxonomy, is to base on the common ground taxonomy agreed by China and the EU. And both are big stakeholders for Hong Kong's financial markets, one mainly as an issuer and the other mainly as an investor. So that issuers will know at least that if they stick with the common ground taxonomy or the Hong Kong taxonomy, then the European investors will be accepting to this. And also the investors will have an idea how credible the issuer's claims are. So we start from there. And the next step, and we do pull in some local circumstances by picking 4 sectors that matter Hong Kong the most. which involve the most emissions in Hong Kong, including things like building, energy, transport, etc. And the next step for us is to expand further into the other sectors in Hong Kong, and secondly, to expand that taxonomy into transition activities, which is even more difficult. The traditional green taxonomy does a lot, but the transition taxonomy does not enough. Nobody has come up with an implementable taxonomy. That's where we're working on together with some of the international organizations like GFANZ, trying to come up with sectorial pathway. Because for transition, you're not talking about just a definition. You're more talking about the transition process, how and when to get to where. So I think this pathway, sectorial focus is important. And we hope that we can come up with some kind of prototype on particular sectors that matter to Hong Kong, like energy, ICT, by early next year, and to roll out sometime within next year. And the third area is on what more do we want the market participants to do together with us. One is, of course, especially for banks, to work with your clients, to engage your clients on the transition path. We have asked banks here to come up with their transition plans, but they won't be able to transition without helping their clients to go for net zero. So how to get from here to there, they need to engage with their clients. And the other thing that I really hope that we can do more is to scale up the investments into both the equity and the debt side of transition activities, which is extremely hard. We tried that using our own exchange fund as catalytic capital. There are also concessionary capital coming from the MDBs, from IFC. But to what extent it can crowd in the private capital, how sustainable is private capital coming in? It's actually quite a big challenge. How better to use our limited catalytic capital to scale up the crowding in of private capital is something that I think we collectively have to think carefully about.
Thank you, Ian. So lots of opportunities, as I said, but I think it's such a new thing in some ways, to transition finance. So I would say that banks, of course, they set their strategy towards it, but I think with the SMEs or the smaller investments, it's a journey. So using our own money to pave the way, I think it's a great way to engage more people and then let them see that there is a path, and then maybe do more case studies, do more workshops, so that more people can get the experience. And I will, if there is time, come back to capacity building.
Right.
It is a term, but I question, does people know what it means and what capacity do we want to build? But if there is time, we'll come back to this. I want to come back to Ian, and probably pivot the conversation to carbon markets in UAE and the DFSA's role in the development of your local carbon market. Could you share with us, the journey and some thoughts you have?
Sure, and it's it's become a relatively controversial topic. I'm aware. I mean, carbon markets do have a role, I think, in hopefully driving down emissions by providing a vehicle through which carbon credits can be bought and sold, either through the compliance markets that are generally mandated by governments, and you have a cap and trade or other model in place, but also through voluntary capital markets, which is the part that we're interested in. The reason I say that is that in the UAE, the compliance markets, that's being done by government and with the onshore regulator and the onshore market infrastructure. But we're open in the DIFC to looking at voluntary carbon markets. That said, I have to say we're not nearly as far along as I would have hoped we would be. And there's a few reasons for that. We're not alone in that. I think with some very good exceptions, and there are some very good exceptions, it'd be fair to say that carbon markets generally, internationally, are at a nascent stage. And of course, there has been some noise around them, and the integrity of those markets, the credibility of the carbon credits involved, and of course, some scandals from time to time that people would have read about. So I think that's one of the reasons why things have been so slow on the uptake just generally, though as I say, with some examples that there are, exceptions to that rather, that are very good. We're very open to looking at voluntary carbon markets in the DIFC and taking it from that nascent stage, but only doing so credibly. So IOSCO, toward the end of last year, published a discussion paper on voluntary carbon markets, identifying that they were at the nascent stage, but identifying some of the problems that seemed to be there, whether it would be the integrity of the carbon credits themselves, some issues around market structure and market integrity, and also some greenwashing. So we pick up on the work of IOSCO, and as the standards emerge, they haven't produced those yet for voluntary carbon markets, but we will pick up on those, contribute to them, and put them in place. But we are looking at what we can do in the meantime. So during COP28, when the UAE was the host or the president of COP28, and that continues until the COP29. The presidency starts at the beginning at the conference and goes through till the next COP. We participated in a simulation on carbon trading, see what could work, what wouldn't work quite so well. And then with the DIFC and other people in Dubai, we have a couple of events coming up where, again, we'll be looking at the veracity of what we can do. We haven't yet had someone come to us with a credible plan for wanting to open an exchange in the DIFC to trade carbon credits, but we are open to do so. But again, going back to that whole market integrity, avoiding greenwashing issue, it needs to be real and it needs to be credible. But we're happy to work with anyone to produce it.
So the door is open.
The door is open.
You've got firm and strong and robust standards based on IOSCO.
Yes.
And potentially exciting times ahead.
Hopefully so, but we haven't got there yet.
Okay. So Eddie, capital capacity building. Now, I've read that there is a TDC survey which reviews some rather depressing figures about, lack of knowledge, lack of expertise, and lack of even individuals, i.e. people. So what is Hong Kong doing to attract more talent? And in an ideal world, what would you, as the Chief Executive of HKMA, like to see?
Well, knowledge sharing and capacity building are both very important. As we discussed, it's a very new area and also evolving area. So let me first talk for a minute on knowledge sharing. I think today's event is a good one, and I think there's a lot that the Middle East, Dubai, and us can do together in the form of research projects, for example. We will be having a joint research study on sustainable bonds with our knowledge partner being Bloomberg NEF. And I think we can share some of the findings with the industry that will be helpful to all. In terms of capacity building, we are actually doing that on two fronts. One is domestic, of course. We have two areas that we're pushing. One is to train up current practitioners in the financial industry on the knowledge about green and sustainable finance with a very well-structured course run by the Hong Kong Institute of Bankers. And most of the participants, practitioners in green area will have to take those courses. Second is that we have got the government to give out a green education grant so that different institutions can run their own courses for both students and financial practitioners to get into courses and get a refund. And that actually raised generally the standard of the green knowledge here. But regionally, we are also partnering with different institutions. Like we partner with IFC to launch an alliance for green commercial bank, getting a number of global banks to share the expertise and knowledge with those smaller commercial banks around the region, in Vietnam, in Philippines, in Thailand, just to get the knowledge on how to get green. Because as we discussed earlier, it cannot be a Hong Kong effort. We are more a conduit channeling financing flows. We need the whole region to be aligned or on top in terms of their knowledge. So we have this alliance. And the other partnership that we have is called the CASI, the Capacity Building for Sustainable Investment Initiative. And this one is aimed at the policymakers, private sector, and stakeholders in the Global South. mainly emerging markets from both Asia, Middle East, and also Latin America. Because, again, that's where the need is the most in terms of transition and in terms of capacity building. So we're doing that both on a domestic and also regional, international level.
Right, that's very good to know. I think I probably only have one question for Ian, then if possible, maybe ask the floor for one question. Eddie told us a lot about collaborative initiatives, and I'm absolutely delighted to hear that there is one research project that is happening. And not intended to be a loaded question, how easy is it for you guys to work with Hong Kong?
Well, no, and I'll give a very honest answer, because I can give a very honest answer because it's an easy answer. It's very easy for us to work with Hong Kong.
Excellent. That's very good to know.
So there is this initiative is terrific, I think, and I'll give full credit to Eddie and HKMA. It was their idea. We joined in immediately, said yes immediately, but it was HKMA's idea. A few months ago, we did a round table with the SFC. We did 2 round tables with the SFC. We did one here in Hong Kong. We did one in the DIFC. So working with Hong Kong, we found to be very easy. And I spoke earlier this year at the Asia Financial Forum, the AFF.
Yes.
And I was asked to do some media after that. And all the questions, every single interview that I did, there were 10 of them, every single interview, people talked about the China-Middle East corridor and what opportunities there are. So we are very happy to work together with Hong Kong, and we enjoy doing so because I love coming back here.
Wonderful. So do you have any initiatives that you want to kind of introduce?
Well, the initiative that Eddie mentioned before, whereby we've got the joint research project aided by Bloomberg, we'll strongly support that. Right. The other thing that we did, if I just go back a little way, in the DIFC, we formed a task force. We had an industry roundtable this morning, and one of the things that was mentioned there was learning from each other and examples and case studies. Yeah. So we had formed a task force in the DIFC, and some of the institutions in this room are part of that, and thank you for being part of that. But we issued a publication whereby they published case studies and examples of what they were doing. So I think as regulators, we've got the ideal opportunity to be almost a clearinghouse of ideas,
yes,
and allow people to come together and share their information and share what they're working on.
Yes, and if I may also add, consider whether the public can also have a glimpse of some of these research projects that you are doing and some outcomes that you have kind of reach conclusions on, so that those who have innovative ideas don't have to kind of go around the houses if they know that the regulators have already thought seriously about it, and they can think of other ideas. Yeah. So may I have time for one question from the audience? Is there anyone who has a question? And if so, maybe just put up a hand and we'll pass the mic over to you. Yes, 2. Well, a lady first and the gentleman, and then we'll go to tea. Thank you, Florence.
Hi, thank you, Teresa. In fact, I have typed in my question through the QR code, but I, of course, would be happy to ask it verbally. My question is to Eddie. So echoing on what Ian has mentioned, that Dubai is promoting and launching ESG Sukuk. Now, given Hong Kong has revamped our tax law some 10 years ago to cater for Sukuk issuance, and given Hong Kong's special status as part of SAR of China, so I mean, have you considered of using Hong Kong to issue ESG Sukuk, in particular to cover China's green assets, and making use of the special avoidance of double tax treaty with China? Thank you.
Well, we have helped the government issue several sukuks when we first changed the law, and the response was actually good. But it was kind of interrupted by the COVID and then other things. The government has a government green bond program, and we are actually talking to them about how best to make use of the government green bond program in terms of creating benchmarks for different markets, not only in the type, like you said, whether it's plain green bonds or green sukuk, or whether it's different currencies. The last time we did not only US dollar, but also euro and also RMB, and we might be doing Hong Kong dollar, tenner as well. So there could be different variations that we will look at, but we will have to check with DIFC, DFSA, and our Islamic friends on their appetite for the Sukuk issued by Hong Kong.
And I should mention that Hong Kong several years ago issued one on our exchange in Nasdaq, on Nasdaq Dubai, and some of the Chinese banks have done the same.
Right.
Okay, that gentleman in a white shirt, yes, you.
Thank you for sharing those exciting stories. Eddie, when you introduced the forum, you mentioned about the role of Hong Kong as the gateway to Asia and Dubai for Middle East and North Africa. One of the aspects that both of these centers have been covering is trade, commodity and merchandise trade. So I'm curious, not the big numbers with the big bonds, but since energy efficiency is already looked at as a big lever to make progress on climate, do you see some possibilities that Hong Kong's technical knowledge could be utilized on evaluating sustainable products being made by sustainable factories and being shipped by sustainable mechanisms, and then scale up the sustainable trade finance mechanism? Thanks.
Well, this is actually very much what we hope we can do. Basically, we're looking at the whole trade finance or supply chain financing. What we hope to do are two things. One is to digitalize it. If you think about the trade finance process, it's hugely manual and it's inefficient. So we're thinking about things like e-bills of lading and cross-border payment using blockchain direct platform. And likewise, we're also thinking about how best to channel all the supply chain information about emissions, about green, through to the exporter. And here, we're actually working together with the BIS Innovation Hub on projects that allow us, one, to use machine learning to get together some of the more forward-looking data, and second, how to channel this data, let's say through a blockchain, into different stakeholders that are involved in the supply chain. So yes, the simple answer is we do want to look at this aspect, especially if Scope 3 will be coming. In that, the exporters will have to know the emissions down the supply chain, and that digitalization plus reporting will be very useful to facilitate trade, not just between Asia and Middle East, but more generally.
Thank you. Unfortunately, I think I have to draw this fireside chat to the close, even though that I know that with these two gentlemen and their experience and their ideas, I could carry on till sundown. But then we have also very interesting panels coming up. So all that remains for me to do is to thank Eddie and Ian for their generous sharing. And I hope that all of us has taken away something that is useful. There is a lot that we need to do at every level in order to help the world to transition to net zero. So thank you very much for joining.